for that, Kitty, and thanks for the opportunity to be able to come along and present today. My presentation isn't going to be providing specific examples of where innovation and technology is happening in the sector, but what I want to seek to do is to be able to have a conversation around where there's opportunities for service providers to the sector in driving innovation and the adoption of technology. So it's drawing together some of the points that have been raised by both Kelly and by Mike so far. The Australian resources sector is certainly going through one of its most intense periods of change. If we look at what's happened over the last 10 years in construction, it's been absolutely incredible. Going forward though, the ability to be able to innovate, to be able to evolve, to adapt and improve is going to be indispensable. Big data, digital mines, automation, autonomous vehicles have all now become part of the narrative of the industry today up in the Pilbara. With the focus on rapidly growing volume through construction of new mines, new ports, new rail facilities, it's undeniable that we have seen inefficiencies become embedded in operations, in companies, in service providers, in organisational structures and the like. So with the construction phase coming to an end, what we've seen is the industry shifted its focus to those cost-cutting efforts, followed by driving operational excellence and continuous improvement. But with so many gains that we've seen now realised over the last few years, the industry has to ask itself where to from here. There certainly is broad acknowledgement of the need to be working smarter, with the next wave of productivity and growth opportunities to come from doing things differently, not from just having bigger pieces of kit. Certainly the mantra in all quarters is on the need to innovate. With the significant capital investment that goes with development of this sector, there's a tendency to be risk adverse, particularly for new projects. Often, but not always, there's a tendency to go with known technology and ways of doing things to get new projects over the line from a feasibility and financing perspective. At the very point in time when innovation can have its maximum impact, it's at a point in time when the industry tends to be more risk averse about embracing it. Most mining companies tend to stick to the tried and true when developing those new mines, unless there's a business case for new technology that's completely overwhelming. Once a new mine is successfully and profitably operating with its tried and true equipment, the impetus for change, technological change, can be relatively small. If acceptable returns are already being generated as it is, then justifying new capital expenditure on new technology can be really tough. When times are bad, the business cannot justify the increased capital investment that it needs to run at lower costs and higher efficiency. Sounds like I'm trying to argue against innovation and the adoption of technology here, but certainly finding that sweet spot for investing in innovations for any company, whether it be a resource sector company or a service provider or in any other industry sector, is a real challenge. But there is a real imperative for many companies in the face of the uncertain outlook around commodity prices to be able to look to doing things differently. But with these fluctuating commodity prices and often the short-term focus on performance, have we actually blurred the line between what is continuous improvement and what's innovation? While the call, we've certainly seen a call for innovation to occur and a real mantra for the need for innovation, the question has to be asked, has it actually become a cliche, and are we executing continuous improvement rather than innovation? Companies are certainly pursuing new ideas to be able to help them reduce costs to develop assets and operate, improve asset productivity and mineral recovery, and to be able to reduce risk and waste while also improving safety. Automation and remote operation centres were certainly previous examples of transformation and innovation, which all have ticked the boxes above as time's gone by. But have these technologies now moved beyond the innovation phase? And while they might not necessarily be the norm, they're certainly headed that way as companies and OEMs seek to continuously improve and refine the technology. So how do we differentiate between continuous improvement and transformation, that is innovating? I like the approach of VCI, which is on the screen, who see innovation as being a means of creating a competitive advantage where a similar level of effort, albeit maybe a completely different type of effort, will actually deliver far greater value. That's the challenge for the industry to be able to deliver on now. The services sector, which supports the resources industry, is fundamentally important to addressing that challenge. It is this part of the sector that I mentioned that I want to be able to focus on, and the opportunities for the services sector to be able to lead the innovation in the industry. In 2015-16, there were just under 7,000 businesses across WA supporting 46 resource sector companies, with the value of goods and services provided by these businesses being $19.8 billion. They're a significant part of the West Australian economy. Collectively known as the PETs for the petroleum sector and the METs for the mining sector, they provide goods and services across the life cycle of resource sector projects. CME hosts an engineering and contractors roundtable every quarter with its members from that part of the sector. Feedback from those sessions certainly leaves no doubt that the cost-cutting measures implemented during the downturn have been felt by service providers in the industry. At these sessions, we've been inviting the production companies like Rio Tinto and Woodside, to come along and present on their approaches to procurement and innovation, with a view for these service providers to be able to see where future opportunity might be. What's been interesting in the themes in these presentations is that the companies, who are all leaner themselves, are pushing innovation outwards and see service providers in the resource sector ecosystem as imperative to drive that innovation, imperative to being able to challenge the status quo of companies. This is certainly reinforced in the biennial mining survey Innovation State of Play that's done by VCI, where they highlight most executives internationally now believe efficiency and control benefits of vertically integrated and in-house solutions is actually outweighed by the benefits of drawing upon external specialised skills and potential outcomes of open systems. We're certainly seeing a shift in how companies approach innovation. Executives from Australia rated the relationships between resources sector and services companies as the most important relationships for innovation, followed by the relationships between themselves and the universities. For service providers to be able to play a greater role in providing solutions, there are some barriers that do need to be overcome. The realities of the robust pricing demands aren't going to go away. Companies being risk adverse about the adoption of unproven technology will take some convincing. Other barriers to collaboration between companies and service providers include the procurement practices of companies and funding of innovation development in the service providers. We see the lack of interoperability of OEM systems and also intellectual property. While those barriers do exist, what we are seeing is that they're being dealt with. The conversations are commencing about how to deal with these barriers. We're seeing the growth centres, NERA and METS Ignited, starting to challenge some of the paradigms and starting to challenge the need for those conversations to be had. There's certainly, shouldn't underestimate the amount of work that is needed to be able to deal with these issues. However, there is that growing realisation and acknowledgement that for the next wave of innovation in the sector, that is going to come from diversity of thinking. To look at where that next wave might be, what I just want to do is touch on where the industry might be and some possible scenarios for the industry in 15, 30 or 50 years. Shell is one of the early pioneers of scenario planning, with CSIRO increasingly doing work in this area. I'm going to draw from some work that they've actually done in Chile with the government there, with industry and service providers in that part of the world, where they've identified 4 plausible future scenarios for the mining sector. In reading the report, I thought there's some really significant parallels for the Pilbara and that their scenarios could be used as a starting point of discussion for us. They have a mining powerhouse, which I've decided to rename it as the resources powerhouse scenario, where demand for them, for us, it's iron ore and gas, remains strong well into the future, driven by continued growth in Asia, with resources sector companies successfully harnessing science and technology innovations to drive production efficiency and increased output to meet this strong demand. In a strong services sector scenario that they put forward, the global resources sector activity slowly shifts towards developing countries, and mining-related economic growth in developed countries becomes increasingly dependent on the upstream knowledge economy, the mining and the METS and the PETS sector that services that overseas demand. In the third scenario that they look at is the sustainability leader scenario, where sustainable extraction practices become increasingly important to social licence to operate, which creates challenges for existing miners but also opens up opportunities for new types of services that support the environment and social sustainability. In their final scenario that they look at, they present the collapse of copper, which I've renamed as the collapse of commodities, where the demand for commodities plummets due to a combination of weak demand by substitutes or a lack of growth in markets and a lack of competitiveness from a failure to improve production efficiency. 3 of these scenarios are obviously very positive scenarios for the services sector, as their role in supporting the resources company in the delivery of innovation is fundamental. They also, the 4th scenario is certainly a negative scenario. But again, the role of the services sector in helping to drive efficiencies, to be able to improve production and efficiencies, again, is an opportunity, for the services sector. The challenge for industry, policymakers and individual companies is about how do we identify actions across the positive scenarios to be able to help us move towards any one of those 3, while also mitigating the risks associated with the negative. Keeping these scenarios in mind, the VCI survey asked executives to consider where the main sources of value from innovation will be, and where the respondents indicated was in extraction, followed by end-to-end optimisation and processing. In all of these areas, we've seen digital technology transforming the industry. When I joined the sector 15 years ago, it was all about sensor technologies on mobile plant to be able to monitor wear and tear of tyres, to be able to monitor utilisation of equipment, be able to monitor fuel use and look to see where improvements could be made around equipment maintenance. That data was previously collected with the goal of being able to find ways to standardise. It's now informing the means to pass from integration to transformation. If you look at the graphs on the screen, in 2013, the technology area seen to have the biggest impact was in integrated and continuous improvement. We've certainly seen that across the companies in the Pilbara. The shift has now been to use that data to develop digital technologies, robotics and automation. But looking forward, in the next 15 years, the trend is towards artificial intelligence, decision support and analytics. With the rate of change that we're seeing, there are concerns that we're not ready from a workforce availability and skill sets perspective. Use of digital technology means that service providers cannot rely on just delivering services locally, but will need to also look at how they can deliver services globally and compete globally. Concern is often expressed about the impact automation and remote operations is going to have on the number of jobs in the sector. But there's no doubt that there will be a change, but it's yet to be seen that it will actually result in a reduction of jobs, but it certainly will result in a change in jobs. When you look at the development and deployment of innovation throughout the sector, you start looking at needing different skill sets to the ones that we already have. The move to artificial intelligence, decision support and analytics is going to require more people with applied mathematics, with computer science skills, with visualisation, with gaming skills of all things, and with data management. As automation continues to become the norms, it's those skills as well as systems engineering and integration that will be needed. Those working on the equipment such as automated trucks will need to have greater diagnostic skills. They'll still need people to be able to work on those trucks. This creates an opportunity for service providers, again, who work in the training and education space. As the technology changes, we're going to need for education and training providers to be more nimble in how their degree and qualification systems are structured. For those seeking to enter the industry, there will need to be new courses developed. One of the pieces of work that we're doing at the Chamber of Minerals and Energy at the moment with the Resource Industry Training Council is looking at how do we train multi-skilled workers for entry into surface mining operations. Rather than only having one entry point into the industry, what we're looking at is the value of a cross-role supply chain-based training model which will have broader application in the sector. For those already working in the sector, we need to look at what are the training requirements and training opportunities for remote operations. So another project we're looking at doing is examining the skill and associated training requirements from this training, from this changing technology to be able to create transition opportunities. While the sector's looking internally at its own use and adoption of innovation and technology, there's also a need to be looking externally about at how new markets can be created for commodities and how the very commodities that we extract here in the Pilbara can actually be enablers for other industry sectors. While most gold is used for jewellery, it's a highly efficient conductor that's able to carry electrical charges. And it's because of this property that gold is found in almost every electronic device. All of you that are tweeting today, your devices all have small amounts of gold in them. Cell phones, televisions, GPS units, desktops, laptops all have an element of gold. In the medical field, we see gold isotopes used in certain radiation treatments and certain diagnosis pieces of equipment. It's even used in the aerospace industry to be able to lubricate mechanical parts. Around the world, we see marine aquaculture nets and pens that are now made with a copper alloy mesh, resulting in more sustainable fish farming practices and improved fish health. When the last time you used a microwave, refrigerator, dishwasher, washing machine, you're all using pieces of equipment that have a market for copper. While iron ore is predominantly used for steel making, and I have to say it was fantastic two images that Rick put up showing Shanghai in 1987 and where it is today and how steel's being utilised in that part of the world. Steel products are used extensively in the transportation, construction and machinery manufacture industry, used to be able to make white goods, used to be able to make cans and containers. We've heard from Mike's presentation just before this one, looking at where there's new opportunities and new markets for LNG. Beyond electricity and heating and beyond it as a transport fuel, natural gas is also a critical input into the manufacture of some fertilisers and chemicals, providing food solutions around the world. And of course, we have the emergence of the lithium market, which will be fundamental to the growth of the renewable sector and the development of battery technology, as Rick has already covered. So innovation in other sectors are finding new uses for our commodities, which is creating and sustaining these markets for us. An important piece of the innovation conversation should not just be about how we in the resources sector internalise innovation, but also to how do we look to how commodities can be used to create new technologies for new markets. Given the pace of change, it's likely that the next few decades the resources sector will fundamentally reshape the way it operates. As market and operating conditions change, the sector will continue to look to innovate to create value. A new generation of science, technology and innovation developed both within the sector and outside of it will help address a broad range of opportunities and challenges across every industry sector. While it's impossible to predict exactly how the sector will change over the next few decades, it's clear that it will change. And I believe front and centre to leading that discussion will be the service providers to the sector. Thank you.